Hey, everybody, welcome back to the show. Excited to be with you here today and excited to talk to Brandon Richards, who's going to be my guest today. Now, Brandon is actually, we know each other. We cross paths a lot because he used to live in Dallas and was a wholesaler here. He's since moved away to Arizona and is doing some commercial stuff and some multifamily investments, and actually recently joined what we call our cash flow group, which is the apartment group inside of Investor Fuel. So really excited to have him here with us to talk about his journey of transitioning from single family into more of commercial properties. Professional real estate investors know that it's not really about the real estate. In fact, real estate is just a vehicle to freedom. A group of over 100 of the nation's leading real estate investors from across the country meet several times a year at the Investor Fuel Real Estate Mastermind to share ideas on how to strengthen each other's businesses, but also to come together as friends and build more fulfilling lives for all of those around us. On today's show, we're going to continue our conversation of fueling our businesses and fueling our lives. I'm glad you're here. Brandon, what's up, my friend?
Not much. I appreciate you having me on.
Yeah. And you also have a podcast too. I was on your podcast a long time ago. Have you been on any of my shows before?
This will be the first time I've been on your show. Yeah.
Okay. That's a weird question, I know, but I've been doing the podcast for 10 years. So sometimes you forget of like, who all's been on. I know that like it wouldn't have been uncommon that you were, but I guess you just haven't. So anyway, glad to have you here now.
Yeah. So my show is The Fearless Pursuit of Freedom, and originally started out as interviewing real estate people only, because that's primarily who I hang around with.
Yeah.
Over the years, I've done interviews with philanthropists, personal coaching, business coaches, fitness trainers, kind of all over the place. Probably moving forward, I'll niche that down back to real estate primarily, but I like learning from everybody. So, people that had an interesting path of business, just invited them on and we just talked about it. And so
yeah. And I love the general theme that, real estate is a vehicle to build the lifestyle that you want, right?
Right. Yeah.
Yeah. Awesome. I know you're an avid traveler too. So we've got that in common as well.
Yeah.
So
Right.
yeah. So tell us a little bit about your background. I know you've been a real estate investor for a long time, and we used to run in some of the same circles here in Dallas, and just maybe tell us a little bit about your background and what you do today.
Long story short, about 8 years ago, I was a nobody, owned a carpet cleaning company, and I was just cleaning carpets, but I knew real estate was something I wanted to do, but I didn't know a single thing about it. I thought, and it worked out well, but I thought, the obvious avenue to get into real estate was get the realtor license. So I got that first. Messed around with that for 12, 18 months or something like that. Then started wholesaling. I joined a brokerage out there with Tim Harridge, and learned a bunch of stuff from him. Loved working there. And then, started branching out on my own, started wholesaling, started flipping. And then over the years, just, I guess it'd be all primarily just wholesaling and flipping. And then moved back to Texas, got a broker's license, and started transitioning into finding larger deals. And so this past year has been that journey of finding and wholesaling larger deals.
Yeah. And I think, I've made that transition as well. I'm primarily doing larger multifamily syndications now. And that's not everybody does, but that's a fairly natural evolution of transitioning from single family into multifamily. And I think people just get to a point to where they see bigger deals being done. Some of it, which I think we're going to talk about, is a confidence issue. Some of it is not really knowing what to do. But, what are some of the reasons why you transitioned, and you're still transitioning? I mean, when I say you transitioned into commercial, I know you still do single family stuff. You're doing some development stuff. I think what happens for a lot of real estate investors is they just kind of broaden out what they do. Like you probably never be completely out of single family stuff. Like there'll always be something going on. It's really, what is your primary focus, right? So
Yeah.
Why have you shifted focus, and tell us a little bit about your kind of like your big why there as to why you're moving into more commercial type deals.
Yeah, I'd say it's a variety of reasons. The average entrepreneur is kind of squirrel minded. You just want to see what's out there, and real estate is so vast. You just kind of want to
Yeah.
learn it all and see which one you like.
Right.
And then there's cash flow, guiding me towards there. I've had
Yep.
single family rentals, duplexes, and they've all worked out. But grabbing a little bit of equity and a couple $100 a month in cash flow is cool, but it wasn't getting me where I wanted quick enough. So, and then I think the commercial space that I've learned so far is just in general talking to these types of sellers and having these more professional conversations is not as I won't say stressful, but it's not as annoying. If you're cold calling pre-foreclosure all day, you're getting yelled at 90% of the day.
Right.
Whereas you start calling some RV guys or some multifamily guys, either they won't answer or they pick up, and you end up having a 30-45 minute conversation with them about everything in real estate. And then at the end they're like, oh, by the way, I don't really want to sell, but it was cool talking to you. And so it's
Yeah.
always it was fun to experience that as I was started cold calling the bigger stuff.
Yeah. Yeah, it's more of a B2B conversation than B2C, right? You're talking to other people like you that may or may not want to sell, but
Right.
it's not, it's more of, it's less of a emotional process or discussion, right?
Right. Yeah.
Yeah, yeah.
Yeah.
And then of course there's the potential for bigger numbers too, right? I mean, I think a lot of single family folks, and that's why I made the transition, is like, hey, if I wanted to double my cash flow or double my net worth or whatever, I have to go buy 50 more of these little single families that took me
Right.
8 years to get to this point, right? And it's like, do I have that in me to do that? Of course, there's other ways to do it faster in single family, but sometimes you're like, hey, what happened with me is we did a multifamily deal. Corey Peterson and I, he's in Investor Fuel as well. And it was it was a deal we ended up selling for 20. We bought it for 10 and we sold it for 20 a few years later. And it's like, holy cow, that was like so much easier than
Right.
all these little red houses like in Monopoly, right? It's like, wow, one big deal moves the needle way faster. And that was what it was for me.
Yeah. And you can go pursue those portfolios.
Sure.
But in my mind, 8 out of 10 of those large portfolio owners don't necessarily want to sell as a portfolio because they know they're getting a discount. So from what I've experienced, is a lot of those 20, 30, 40, 50 portfolio owners in the single family space will end up selling them off one by one as retails.
Yeah.
Whereas, one and done. And I
Yeah.
would assume, and I don't know actually firsthand, but I would assume that type of financing would be more difficult than a commercial loan for a multifamily.
Yeah. Yeah. I've thought, like, if I could snap my fingers and sell my my portfolio of rental properties here in Dallas, which
Yeah.
has a lot of equity at this point, I would to upgrade into multifamily. But I guess in my mind, and this might not be the case, but if to sell it as a package, I'm probably going to sell it at a discount, or they're going to want to pick through it. Like, well, I don't want these. I only want those. Like, I don't want to do that. If I could do a 1031 into a bigger deal and it was that easy, but problem is it's not that easy. One is I probably have to discount, especially right now where rates are and stuff, probably have to discount the portfolio. And then the second is, you got to have a bigger deal to jump into that you can apply that capital to right away. So anyway, first world problems we're dealing with here, but
Right.
real
So
problems.
that's why guys like you and other large single family guys make the transition, because it's not easy to get out of those portfolios. You might as well just get into something much larger.
Yeah.
But larger paydays, that's obviously a good guiding factor of why we started moving this route.
Yep. And so we just said you'll always probably dabble. I mean, at the end of the day, I've said this before, guys like us or people like us are in the opportunity business, right? And so you're looking for different things to arbitrage, but talk about kind of that transition, or, why you didn't do it sooner. I think there's a lot of mindset issues that people just think, well, that deal's too big. I can't do that. Especially people that started in single family. It's kind of hard to think about moving from, you probably bought houses for 5-10 grand before in Dallas, right? Over the years. I mean, I know I bought some for cheaper than that. And then going to properties that are, the last multifamily deal that I was a GP in was $42 million purchase price, right? And so in your mind, you're just like, that seems unfathomable for some people.
Right.
So talk about some of the obstacles you kind of faced of making that transition.
Yeah. So for me, I bought my first small apartment complex 3 years ago now. And it was just me. In my mind, it was okay. I don't really know lingo. I can, I understand a P&L and I can get to a cap rate, and I'm just going to go for it. So, um, I just got in the marketing, um, direct mail marketing, and just to see where it would go.
Yeah.
So, um, yeah, I just picked some tertiary markets around the DFW area that were less competition, and I just started mailing all the apartment buildings and storage facilities I could find, and that's how I landed the one. And it went not the way I planned in the end, but the initiation with the seller was, like it was like we said before, it was not as cumbersome of a conversation when you're trying to buy somebody's house and they're have two mortgages, or they're back on taxes or foreclosure or whatever it is. There's always these little emotions that are involved versus, it's a numbers game in commercial. And so,
Right.
I got that guy to owner finance it with very little down, and it ended up being, a fairly decent property for a while. But it was just me. The marketing was the easy part, because I knew if I get the marketing out, it forces the calls to come in, and it forces me to have the conversations that I didn't necessarily want to do or knew how to do. I forced myself into action by just direct mail marketing. I mean, so, I just built the list, and that just forced the incoming calls to move me in the direction I wanted to go in my mind, but I couldn't, get over that hurdle. And then when I finally got it closed, I was just thinking, man, that was just as easy as buying a house. I mean, why didn't I start that before?
Yeah.
And imagine management's a little bit different. You got more doors and more leases and all those things, but overall, the financing and the marketing to find it was easy.
I think that there's this misconception too, for people to do single family, to think that multi-families are this like owned by faceless organizations that don't also have reasons to sell at some point, right? And I just think that's not true. It's owned by people just like me and you and people that are listening right now. Sometimes they're inside of syndications with multiple people, but there are lots of reasons to sell. Like you just assume that, like, well, why would they ever sell it? It's like,
Right.
well, some of them are at a place in their life when they want to sell it. Some of them, it's a year where their income is maybe down, and it's an opportune time for tax purposes to sell it. Some of them pass away and the family wants to sell it. It's honestly a lot of the same issues,
Right.
probably less general distress than just the timing is right. Like when you get to a certain age and you're just like, I want to simplify, I want to move up into a bigger property. There's lots of reasons why somebody would sell. And I think they tend to be generally, like we talked about, less around emotion than just a business decision, right?
Right.
Yeah. So
Yeah.
marketing to people, you know, networking with people to find those deals, you know, it's kind of crazy to think that it's a big company that owns this. They probably will never sell it. And it's like, no, they have lots of reasons why they would sell it too. Why not have the conversation, right?
Right. Well, yeah, and you'll learn that. I mean, the typical syndication is 3 to 6 year holds.
Yeah.
So you might be catching them at the right time.
Yeah.
I learned back at the investor fuel cash flow event that, there's just a lot of bad operators. So
Yeah.
bad operators, bad management. So year two, they're like, oh shit, we, bit off more than we can chew. We should probably get rid of this thing. And, all the adjustable rates that those guys were getting into. And there's a lot of reasons that just force these big guys to unload these properties that you, like you were saying, you in your mind would think, why would they ever sell if it's cash flowing? But they've got the investor money for 3 to 5 years, and they've got to refi or figure out, a new place to bring money in to refinance it and keep it long term. And it's not doable in a lot of these big ones.
Yeah. And that's what's going to happen. I think that is what's starting to happen now is some of these bigger commercial deals is it was just way too easy for people to raise money, but they weren't great operators. And with the change in the market here, with interest rates changing, and it's pretty common to buy, we've done several like this where we bought them and we had like a 3-year bridge loan.
Mhm.
And if you got caught at the wrong time, and we did on a couple deals, I mean, it still has worked out and we pivoted because, we're good operators, but there are plenty of deals out there where the person wasn't a good operator. Then they have to, their bridge line's up, so they have to refinance, and that lender is looking at them and they know if they're a good operator or not. They're like,
Yeah.
your vacancy is up, like you didn't get the rents up as much as you thought you would. And so now either we're not willing to refinance you, or your interest rate's going to go way up because we see this as more risky now.
Right.
And that's, for those folks, it creates a lot of a drama and issues. For folks like us, it might create opportunities that'll come our way because those folks are going to be in a position where they're forced to sell.
Yeah. Yeah.
Yeah.
And frankly, up to 80, 100 units, there's quite a few mom and pop owners still,
Yeah.
and you can
Yeah,
find
for
those. I
sure.
mean, and
For sure.
skipping down or skip tracing the owners in an LLC is as easy as a 30-second endeavor. And you can call these guys and they'll talk to you. I mean,
Yeah, for sure. For sure.
it ends
And the
up
cool thing is like, there's some people that will even tell you like, look, I'm not looking to sell right now, but I'm going to sell probably about 18 months. And like,
Yeah.
because they have in their mind, I mean, again, like you said, with syndications, we go into it with generally a 5 to 6 year horizon. And we tell our investors that because, they want to know, when am I going to get my money back? And we're like, well, and if this is a 5 year project or this is a 6 year project. And so some don't want their money back. They want to keep it busy. Some are expecting that because they're at a certain age where they just want to move on. And so it's natural for more of the business owner type that's not the mom and pop, maybe even mom and pops too, but certainly the larger folks, to have a target end date of the project. Like if they hit certain milestones, I've seen, and I was a part of one of these, we sold the deal after 3 years, even though we said it was 5 years, but we doubled the value of the property. So we kind of hit the milestone and it's like, hey, it's time to exit. It's in the best interest of our investors to exit now because we've surpassed our milestones in 3 years instead of 5, right? So that type of stuff is happening when you're talking to commercial investors. So let's talk about different types of commercial. We've really been talking about single family and multi-family now,
Yeah.
but I know you've done a number of different things, RV parks and self-storage, and we do a little bit of self-storage too. Let's talk about, of course, there's office space and lots of stuff too, but let's just talk about the stuff that you've done and maybe some of the things that you like or don't like about each of those asset classes.
Sure. So I've only owned multifamily and storage at this point, but I've wholesaled a variety of asset classes, and I've seen the operation of them from those purchasers. So my avenue of attack moving forward is going to be multifamily storage and RV parks. I've wholesaled motels, warehouses, variety of things, restaurants. I'm brokering a business right now, so I've seen a lot of different types of transactions, and I seem to like or gravitate towards RV storage and multifamily. RV is more like an operational business similar to storage. There's an on-site manager, but at the end of the day, it all comes down to appraisal and cash flow, and it's just easy to evaluate. And so, yeah,
Yep.
for whatever reason or another, I've just gravitated towards those three avenues.
Yeah. Yeah, we've done some self-storage, and we like, there's reasons why we like those, right? Which is you don't have as many uh, tenant law issues and stuff like that.
Right.
Like you do a single family. In some
Yep.
states, that stuff is just terrible, right? And then for apartments, like I guess for most of the apartment deals that we've done, they tend to be kind of 20 to 40, $50 million deals. So they're just big deals where you can move the needle a lot faster. And so that's probably one of the things I like the most about
Right.
that. And I just think we tend to focus on like typically B class type properties. And so, there's a real housing affordability issue in America. And
Yeah.
like that is a pretty safe asset class, from my perspective of it's probably the most affordable housing in town. That's not like, low end stuff that I don't really want anything to do with. So,
Right.
yeah. For folks that are looking, I have a question for you. So, knowing what you know now, you've been an investor for, you said 8 years
Mhm.
or so. And if folks are listening to this, did you have to do, I'm sure there's plenty of things you learned and applied, but was it a requirement to do single family first?
No.
Yeah. But a lot of people think it is, right?
Well, right. So like there's some obvious things that would help. Like if you're walking in an apartment complex and you've never rehabbed a house, you might think, oh, this is $1,500 painting carpet. Whereas
Right.
as a previous flip, you're like, nah, it's not $1,500. This
Right.
is like 6 or 8 grand right here. And
Right.
so that is pretty valuable, but you don't have to know that. You can bring in a contractor.
Sure.
Um, oversight over the contractor's inputs kind of important in knowing that knowledge, but at the end of the day, you don't have to have any of that knowledge. You can
Yep.
bring in other experts to help you. So yeah.
Yeah. Yeah. So any advice you would give people that are looking to get started, whether they have previous single family experience or not, let's just say you're talking to the single family person that's thinking about
Sure.
transitioning into more of a commercial type stuff. What advice would you give them?
When I've been asked that in the past, I always just kind of tell a little bit of my stories. Like I thought I had to be a realtor, and then I want to be wholesaling. When I did my first wholesale, I was like, man, that was easy. And then I did my first flip, and I was like, man, that was easy. And then I went to the first storage and apartment building. I was like, man, that was easy. So every hurdle that I've surpassed, I've looked back and thought, damn it, I should have done that earlier. That was easy. And
Yeah.
so that's what I tell people when they're trying to get into the next one, or even if it's, I guess, anything in life is like, once you finally do it, you're most likely going to look back and think, I should have done that earlier.
Yeah. Yeah. You always think it, well, of course, there's people that think it was way harder. It should have been easier. but
Right. Yeah. Yeah. I'm sure there
but
is. Yeah.
I think we tend to assume that stuff is harder than it is, and you do it, and you're
Yeah.
like, oh, that's not as bad as I thought it would be. But
Yeah.
the important thing is, like everything in life, it's just like riding a bike, right? Like you got to do it. You got to fall, scrape your knee a little bit. You got to learn some lessons, because
Yep.
that's a stepping stone to building your confidence to do the next one or a bigger one, right?
Yep. Yeah.
So
Exactly.
the time is now to go do that. Like,
Yeah.
don't wait. There's no reason to wait. I don't think. Yeah, I'm sure you're included in this. There's nobody that looks back and says, you know what, I wish I had waited longer to get started. Like we all
Right.
wish we had started
Oh
earlier,
yeah.
right?
Yeah. Yeah.
Yeah, yeah. So if you're gonna do it, let's do it. It's time to go.
Right. Yeah.
Yeah,
Just force yourself into doing it. Like me. I just, I was scared to get into it, but I just started putting out mailers, and it kind of forced me to take action in a sense, I guess.
yeah, yeah. Awesome. Well, Brandon, it's been awesome. So we've known each other for a long time. I think we kind of knew of each other for a long time, and then
Right.
got to know each other a little bit over the past couple of years. And then you recently joined Investor Fuel in our cash flow group, which is the multifamily group. Would you mind just sharing a quick testimonial of your experience, even though it's limited, but you've got a pretty good thought about what Investor Fuel is all like. Would you mind sharing your experience?
Sure. Yeah. I attended the Dallas event at the that was a Renaissance, correct?
Yeah.
Yeah. Yeah. It was good. It was a good place. So great location. I've always known about Investor Fuel. I've had quite a few buddies that have gone to Investor Fuel, and quite a few that are still in. And I've always heard great things. But moving from Dallas to Tech, or from Dallas to Flagstaff, it was kind of a bit of a logistical hurdle in my mind. And so um, I joined Corey Peterson's Kahuna boardroom, and didn't realize at the time until you messaged me that you guys had joined up. And I was like, perfect. I think the doors, the heavens just opened up and said, all right, it's time to join Investor Fuel. But it was a great event, well organized, and the quality of speakers and the quality of just the organization of the event was great. I've been to quite a few events over the years, and I just enjoyed it overall. Good people. And for me, as being an introvert, normally if I'm going to a networking event, I'm in the corner over here just trying not to talk. But there was a lot of people like yourself and various other people that would come up to me and or grab my hand. Let's go talk to this guy, because I can tell you don't like talking to people generally. And so being forced into networking and having those people there kind enough to do so was awesome.
That's awesome. Well, we're excited to have you be a part of it.
Yeah.
Brandon, if folks want to connect with you, you've got a podcast, you're always looking to raise money, you got a lot of different things going on.
Yeah.
Tell us where to find you at.
So the podcast is the Fearless Pursuit of Freedom podcast. Admittedly, it's been taking a little bit of a hiatus, but I'm jumping back into it. But it can be found on YouTube, Spotify, iTunes, iHeartRadio, and just about any podcasting platform out there. And then I'm active on Facebook. That's where I kind of just like update the world on what I've got going on in real estate and my other hobbies. And yeah, that's pretty much it. I have an Instagram, but that's more personal stuff. So if you want to see me riding dirt bikes and flying planes, you can go on my Instagram.
Awesome. We'll add some links down below in the show notes for everybody. So, man, thanks for sharing your story with us. Thanks for sharing some time with us today.
Yeah, no, I appreciate it, Mike. Thank you.
Yeah, always good stuff. And everybody, hope you got some value from today. If you're looking to transition from single family into commercial, hopefully you got some lessons there. By the way, if you're looking to transition from single family into large multifamily syndications, 100+ units, you should check out our Investor Fuel cash flow group that Brandon is a member of, and I partner with Corey Peterson on, because we have a lot of folks in there that have made the transition from one asset class to another, or if you're already doing a ton of multifamily, we'd love to have you there too. So hope you guys got some value from today's show. If you haven't yet checked out Investor Fuel, we'd love it if you learn a little bit more about us and see if we're a fit. We're looking for active real estate investors that want a community to come be a part of, give, share knowledge, do life with, travel the world with, invest together, and all sorts of other things. So just go to investorfuel.com to learn more. Otherwise, we'll see you on the next show. Take care.
Are you an active real estate investor? If so, and you want to latch on to the power of surrounding yourself with over 100 of the nation's leading real estate investors, all committed to building stronger businesses and living richer, fuller lives, you should jump on a call with us to learn more about Investor Fuel. Simply visit investorfuel.com to get started.